Hey, good afternoon, everyone. This is Mark from Right Line Trading. We still a lot of people coming into the room, so I'm going to give it another minute, and then we'll start. Hey, good afternoon, everyone. Thanks so much for coming into the webinar and giving me your time. My name is Mark. I'm with Right Line Trading. We're www.rightlinetrading.com, info@rightlinetrading.com. Phone number 786-713-5276. And just a little bit about myself. I'm a graduate of the University of Pennsylvania, former professor at Jefferson University in Philadelphia. And I've been involved in the financial markets for over 20 years. And I began trading futures and Forex about 10 years ago, and stocks back in 1996. And in my graduate work, I was involved in the optimization of software systems via mathematical modeling. And back in the old days, when I was in graduate school, there were only a couple of computers in the world, and they ran on punch cards. And what I did was mathematical modeling for the U.S. Navy and help them optimize underwater decompression schedules. And what I did when I started Right Line Trading was look upon each individual financial market as a closed system. And the future direction of price is determined by a series of independent forces, which we define as independent variables. We determine what those forces are, and then we place these variables into a multivariable equation. And when we optimize it, we're able to very accurately predict the future direction of price on any given financial market. Now, I want to show you today an indicator called the three-line indicator, and it's a leading indicator. It tells you where price is going to move out into the future. And it assesses three different individual forces. The first line looks at momentum. The second line looks at stochastic. And the third line looks at order flow. Now, it does it in a very, very unique way. It does a multi-time frame assessment of these three parameters. I'm going to go over each one individually. Now, when it's red, on the first line is red, it means that momentum is down, stochastic down, order flow down, or up. Now, I want to show you why it has future predictive power. And we're going to go into this much more in depth as the webinar continues. What we do is we don't assess any of these parameters from your trading chart. We look at the next two higher time frames or longer time frames. So let's say you're trading a 3-minute chart, it assesses momentum from the 9-minute and the 27-minute chart. If you're trading, say, an 8-range chart, it's going to look at your 13 range and your 21 range, which are the next two higher fib numbers. If you're trading a 377 tick, you look at your 610 tick, and I think it's your I think it might be your 910 tick, but it's your 900 and change tick chart. So it doesn't assess any of these forces on your trading chart. It looks at the two higher time frames, and we'll go into that a lot more. Now, first, let's take a look at order flow. Now, order flow is really an important force in telling us where price is going to move out into the future, as long as you adhere to certain rules. Now, the delta of any individual candle shows the buy-sell imbalance of aggressive buyers versus aggressive sellers. Each candle creates a delta. And you can see that above each candle, there's a number. And this negative 1480 tells you that there's a major over-imbalance of buyers, aggressive sellers here, versus aggressive buyers. Here, they're more aggressive buyers. Here, more aggressive sellers. Now, in general, here's where order flow tracking leads to problems, and why it really takes a little bit of tweaking in order to give it a tremendous amount of predictive power. Sometimes there can be there can be an overabundance of aggressive sellers in an up candle, or an overabundance of aggressive buyers in a down candle. So if you simply look at the absolute value of the delta of your trading chart and then assess it down below via use of an analysis like this, which simply shows the difference in the absolute value of the delta, it really doesn't have much predictive power looking out into the future. And all that matters to us is where price is going to move out into the future. So what we do is we look at the two higher time frames. And if, again, we had gone over that. So let's say we're looking here at a 3-minute chart. This is going to be assessing the delta of each individual candle of the 9-minute and the 27-minute. And then it's going to place those values into a 15-period moving average on both those two higher time frames. Now, the moving average smooths the data. So when you get an occasional negative delta on an up candle or a positive delta on a down candle, those are outliers. And because the moving average direction or slope is determined by 15 values in a row, it allows it to throw those outliers out. So what you get are two delta moving averages in your two higher time frames. And they give you a tremendous ability to predict how price is going to move out into the future. Now, this is simply the order flow component of the 3-line based on the delta moving average of the two higher time frames. It does nothing and uses nothing from your trading chart in order to make its calculation. If it used anything on the trading chart, it wouldn't become an independent variable. It has to be independent of price on the chart that you're trading. So this is a 5 range, so it's looking at the 8 range and it's looking at the 13 range, and it's creating that delta moving average. When both those moving averages are moving to the upside, it's going to be blue or green. Now, we did away with the blue color. So this would be all green. And we did away with the orange color, and this is going to be all red. So it gives you an absolute direction that you must trade in the market if you don't want to get stopped out. And that's about 65% of the problem in taking a trade. When order flow is to the upside, which means there's a significant amount of buying pressure based on what's happening on the 2 higher time frames, you have to trade long. When the delta moving averages are synced to the downside on your 2 higher time frames, you must trade short because your trading chart is going to follow those 2 higher time frames. The same thing again when they move to the upside. When there's significant buying pressure on the 2 higher time frames, they're going to follow the direction of those 2 higher time frames, and they're going to move to the long side. Now, I took the delta off of the trading chart because we don't care what these numbers are. All we care about is what the delta of the candles are on the 2 higher time frames, place them to a 15 period, assess the slope of that 15 period. When the slope is up, it's green on both. When the slope is down on the 2 higher, it's red. And here's another instance. Now here you have an overabundance of selling pressure. Price is right at resistance. As soon as order flow goes green and resistance breaks, you've got a long trade. And right here, when you're caught up, now this is caused by market profile, and this is an area of resistance. Now you can only trade the market long. You simply have to wait for resistance to break, and you have a long trade. Now, all of the other traders that are trying to counter trend trade in the opposite direction of the delta moving averages of the 2 higher time frames are very likely to get stopped out. Here's another example. This is a trade I took in the live trading room, simply in the direction of order flow for 18 ticks. And here's a little better styled example, again using market profiles, areas of support and resistance. When you break a support here and you finally move through, you can go short because order flow is aligned to the downside, and price is going to fall, predictably fall, to support. Then you can go long here off of support, but then your next best perfect trade is you're trading off of the resistance of the point of control. Order flow turns to the downside, and you have a very, very nice short trade. Another example, sitting on top of support. Order flow's already turned green. It launches you right up to resistance for a perfect long trade. Now, I wanted to give you these examples. You're sitting on support, you can go long. Come back to support, you go long. Back to support, you go long. Then if you want to take it what's considered a counter trend trade, you have to wait for order flow to turn. Now, I don't like to counter trend trade. I do it occasionally, but I'm only going to do it if order flow turns. And if the delta moving averages of my 2 higher time frames align to the downside and tell me that there's now significant selling pressure on the market, there's an overabundance of sellers, that's what I'm going to take the counter trend trade short off of upside resistance. And I'm going to close the trade at support. In this particular case, I anticipated a big bounce. That's 33 ticks. It didn't happen. Support broke. And my next anticipated trade would be a move back to resistance and a short if order flow is red. Now, we're going to look at the next parameter, which is momentum. Now, we use a MACD to assess momentum, and the MACD is an excellent indicator to assess momentum. And there are lots of ways of looking at momentum. We used Heikin-Ashi momentum for a while. An oscillator is also a good momentum indicator, but MACD assesses momentum really, really well. Now, let's look at what happens if we use the MACD on your trading chart in order to try to trade. And this is what most day traders do, and swing traders, and this is why most day traders and swing traders lose money, and they consistently lose money. Right here, you get a pivot in which there's a higher high. The MACD calls for a shorter high. Creates a shorter high, which is divergence. You can see that divergence simply gets run over. You're going to get stopped out. Then you have this pivot down and right back up. This is an equal high, but the MACD makes a much lower high. You try to short this, you get run over. So divergent signals off your trading chart using the MACD are extremely unreliable. Now, the black line is a crossover between the MACD line and the signal line. And if you were trading this, you would go short here. And you could see you went basically to support and then continued, and then the MACD continued, price continued to rise. So all the MACD did here was give you three failing signals. Divergence failed here, divergence failed here, and this MACD crossover failed. And this happens over and over again when you use MACD off your trading chart. So, but what we do is we use the MACD off the two higher time frames, off the 8 range and the 13 range. And what we do is we look at the slope of the MACD line and when it crosses the signal line. So, and we totally ignore MACD divergence. Now, there's MACD divergence and there's stochastic divergence. MACD divergence is, we did an assessment, which one is better. In general, MACD divergence is extremely unreliable, so we completely ignore it. All we do is look at the slope of the MACD line and the signal line, and it's done off the two higher time frames. Nothing is assessed off your trading chart. Just like this crossover would have failed, it doesn't have much predictive power in determining where price is going to move out into the future. Now, if we look at the first line, this is momentum as assessed by the MACD on your two higher time frames. This is an 8 range, it's looking at the 13, and it's looking at the 21 range. And now order flow and momentum are being assessed on those two higher time frames. We're adding more specificity now, because in order to take a long trade, these two independent forces that are brought to bear on price have to align. And I'm going to show you instances where they don't align. And when they don't align, you have to step aside. And I'm going to show you what happens when these independent forces don't align. So now you can see throughout the whole period where I had this blue line, you can only trade to the long side. And again, once you break resistance, you take a long trade. You break support, take a long trade right to resistance. It's a very low risk, high reward trade now in the direction of two independent forces as they're assessed on the two higher time frames. And price is always going to move in the direction of those two higher time frames when they are in sync. When they're both not in sync, you're not going to get that green line. Now, I purposely took out the instrument and I took out the speed of the chart. I mean, you don't know whether, this is obviously a range chart, but it doesn't matter. And what I want to really make clear is that this is time frame independent and it's instrument independent. If these are true forces that are brought to bear on price, it doesn't make any difference what you're trading. You can trade futures, you can trade Forex, you can trade any stock, and you can trade it on any time frame. A true independent force that really moves price is time frame independent and it's instrument independent. And this works equally well on any of the three major asset classes, futures, Forex, and stocks. Obviously, it works on bonds and notes. I haven't looked at cryptocurrencies, but I have no doubt when those platforms become sophisticated enough to do this kind of assessment, it will work on them too. And when momentum and order flow are aligned to the upside, all you can do is take a long trade. And you can see all the different traders trying to counter trend trade. They're in the orange candles. And what they're doing is they're calling tops based on MACD divergence and oscillator divergence, or maybe off of fibs. It doesn't make any difference. These are the 95% of day traders that are counter trend trading off of some signal, and they're all going to get stopped out, consistently stopped out. Even when you think the market cannot go any higher and the market is technically overbought, it will continue to move higher until order flow and momentum turn. As long as institutional money is creating overabundance of buyers and there's buying pressure on the two higher time frames, price is going to rise on your trading chart. And the only time you can take call a reliable top or attempt a counter trend trade is when both of these lines go red. Same thing. But what I wanted to illustrate here is right during this period of time, we've got momentum aligned to the downside. Order flow is aligned to the upside. And these are each equal independent influences on the direction of price. What happens when they don't align? And there are periods of time when they don't. In fact, there's significant periods of time when they don't. And when they don't, price is going to chop. And if you ever wondered why price chops, it just seems to move in an incoherent and random fashion in which it doesn't seem like anybody is making money. It's simply because these independent forces that determine the future direction of price are not aligned. And if you try to trade during this period of time, you're real likely to get stopped out. You got to wait for them to come into alignment, and then you've got your perfect trading direction, and down you go. Same thing again, non-alignment, no trade, they align, and you've got your break and move up to the long side. You always have to trade in the appropriate direction. Now, the stochastic analysis is a little more sophisticated because we did find that stochastic divergence on the higher time frames does have some predictive power. So the analysis of stochastic on the two higher time frames is going to be a little more complex. It's still very easy to interpret. And what it does is it takes the pressure off of you of watching the stochastic line and the signal line. Now, first of all, you can see right here, I didn't map it out, but here's that swing high, the same high that I showed you when MACD divergence failed. It shows you stochastic divergence also failing. Not much off your trading chart has much predictive power in moving out into the future. But what I wanted this slide to indicate was this. Anytime the stochastic is overbought, it will stay green. Anytime the stochastic is oversold, it will stay red. Because we don't like to trade divergence signals. So when we're overbought onto two higher time frames, we believe the bulls are in firm control of the market. And it doesn't matter whether the stochastic line is above or below the signal line. If it's overbought, you're always going to get a green. When it's oversold, and this has to be on both higher time frames, when it's oversold, you're always going to get a red. Now, it is going to show you stochastic divergence on one of the two higher time frames, and I'm going to show you how it does that. Now, first, I did show you the divergence. Here's the equal high. Here's the divergence signal on stochastic on your trading chart. You can see it doesn't predict in any way this fall. You just get run over just like you did on MACD divergence. Now, just to sum that up, when you're overbought, the oscillator line stays green. When you're oversold, the oscillator line stays red. In a strong uptrend, if there's potential divergence, it's going to trigger a color change. If there's a strong downtrend, if there's potential divergence, it's going to signal a color change. I'm going to show that to you. Now, right here is the stochastic line. And you have potential divergence right here. And you see it turns red. And when you get this one candle long little red patch on the stochastic line or the middle line, you can exit a trade if you're in it, if you choose to, or sidestep an entry if you're going to go into the trade at that point. But in general, even off the higher time frames, so many of these signals fail, I tend to ignore it. But we wanted to have it printed out on the chart so that if your trading methodology was a little bit different, this is going to occur intra-candle and keep you from taking the signal. You can sidestep oscillator divergence if it occurs off the higher time frames. In general, though, I just choose to ignore it. So if the oscillator red is bracketed by order flow and momentum green, I know that I'm almost absolutely looking at a divergence signal, and I'm just going to say I don't care. I'm going to take that trade long. So here's now the three lines assessing their each force independently. Momentum, the middle line is stochastic, the last line is order flow. Now, when these align, it's really tough. You really want to focus your attention on price. You don't want to have to be looking at the three line. Sometimes when price is choppy, it's going to be changing color quite a bit. You just want to trade off of price. When the candle halo is outlined, in this particular case, light blue, it means that the three line is aligned to the upside and you're going to take a trade long. Now, this is not a indicator color, it's a default color. You can put this halo on your candle in any color that you like. But it allows you to focus on price and not have to look down at the three line. Now, you're going to get this candle halo color if the order flow line and stochastic line are green, even if the momentum line is yellow. And let me tell you why, because we did a lot of work on this. We did a 2-year look back on market replay. When this is yellow, it means that the MACD line is heading up. It simply hasn't crossed over the signal line yet. and that's reflected in the candle already has the halo. So it's doing a quite elegant assessment that's even more sophisticated than just the colors themselves. Now, right here, you can see you still have the light blue halo. Here, the 3 line is turned to the downside. It's orange. These 2 up colors, there's no halo around the candles. Now the 3 line is aligned to the upside. There is a potential entry candle, and you're long. So let me show you another trade right here. Now, even though this is yellow, it means that the MACD line is moving to the upside. It simply hasn't crossed over the signal line yet. So you get a break, pull back, and long trade. Pull back and long trade. Your absolute direction is defined by these 3 forces, by the 3 line. You can't take a short trade, and the candle halo tells you that. It screams it out. Now, here's the same trade. I simply made the candles bigger, and every pullback to support, you go long. Pull back to support, you go long. You stay in the appropriate direction, aligned with order flow, stochastic, and momentum is assessed on your 2 higher time frames. And I just added arrows, and here I simply changed the outline color to show you that you can outline the candle bodies in any color you like. This is just a default color. Now, I'll answer any questions at the end. Now, included in this indicator package is this line. This is a 50-period simple moving average. There's nothing particularly elegant about it. You can pull it down off of this is on NinjaTrader. It's also active on Sierra. You can pull it down off of the indicator smorgasbord there. The only difference is that the slope degree of the line changes its color. And you can see it can be yellow, red, or green. And it's got a default slope degree that we're going to set in the indicator for you, so that when it has a couple of degrees of slope to the upside, it's going to be green. We also are including this 15 proprietary, it's a 15-period proprietary moving average. Now, this 15-period moving average is one of the most elegant indicators that we have on the Right Line platform. And it seems like it's one of the simplest, but it really is not. And let me show you a different slide. Obviously not that one. Let me go back a little bit here. I'm going to show you right here, because this 15 period is an amalgam of 2 indicators. It is an amalgam of the 15 period, and it's also got an ADR ADX component. And the ADR ADX component assesses volatility. So when you've got really good volatility, and we as day traders and swing traders, we need volatility, because that's what gives us these big moves, these low risk, high reward trades. But when the market leaks volatility and the modified 15 becomes yellow, the trade entry is associated with increased risk. So the perfect trade, the one that has the lowest risk and the highest reward, is when the 50 is green and the 15 is green on a long, and the 50 and the 15 is above the 50, and they're both green, and just the opposite on a short. Now, what I want to do, and I should have done this before, is I'm just going to quickly open NinjaTrader, and while that's opening, I'm going to put the slides back, and I'm going to show you the line on a real chart. And I simply completely forgot to do that. unfortunately, here. And so let's wait 1 second. It'll only take Ninja a minute to open. Now, this is the full platform, and I don't want to get into that. I want to stay with the 3 line. So it's opening right now. It'll only take a minute. And I want to show you how well this works on a live chart. Now, so far this week, I've taken 6 trades in the live trading room. All 6 are winners, and we're up just under $1,000, trading a very small number of contracts. And I'm also going to show you that as well on my NinjaTrader backend. I mean, this gives you very, very low risk, high reward trades. Just hang on one more sec. I'm really sorry about this. I should have loaded this before the webinar started, and it completely slipped my mind. Now, the control panel is up, so let me give it a second to load. The market's closed, so we're going to get it won't take much time. I'm going to go through a number of different instruments. I'll let you see how it works on the E-mini and crude. We'll put a stock up. No, I don't have a Forex data feed, but we can look at stocks, and we can look at any futures contracts you like on any speed. And you're going to see how really well this predicts price. So we made $412 today. I'm going to take this off, and I want to. Now, the first thing I'm going to do is I'll show you. Here's the control panel, and here's our account performance. And well, let's go to yesterday and today. Let's generate. And we're going to look at the trades. We have $950 of profit in 2 days. Here are the trades. I just have to go here to currency. We've got 6 trades. We made 225, 165.50, 150, 150, 150, 112.50. I closed 1 trade at break even, and it went on to become a winner. So that's it. We have 6 trades, 6 winners, and so far we're up $950 this week. Really trading a small number of contracts. So let me just open the chart for you. Hang on 1 second. Okay, here we go. Now, here's the chart, and here's crude oil. Now, this is a live chart. This is a real chart. You can see right here is your perfect crude oil trade. Right here. You have a break. You have a pullback to resistance. The 3 line is red, 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 and there's your short trade. Right there. Now, I had closed the trading room already this morning when this trade occurred. We got our 3 winners and out in under an hour. So I wasn't around to take this trade this morning, or I would have been on this trade fast, and that would have given us another winner. Now, there was no trade here. I watched this trade. The machines just drove price down. There was nothing to trade. And here's another winner right here. 50's down, 15's down, 3 line is aligned. This is what we're looking for, and there's your winner. Very, very rarely are you going to get a loser. And there is your monster perfect winner. 50's up, 15's up. You can see the halo of the 3 line. The way I formatted it, you can make it any color you like. If I click on the 3 line, you can see that what I did was I have my candle outline as dark orange and sky blue, but you can color them anything you like. And my 2 higher time frames have order flow, stochastic, and momentum aligned to the upside. And this is a gigantic trade right here. Depending on your automatic trade management strategy, you could have gotten 43 ticks. Throughout the whole move, order flow, stochastic, and momentum are aligned to the upside right here. Now, as soon as the modified 15 goes yellow, you know the trade is starting to get shaky because volatility is now dropping out of the market. Here's a trade I took right here yesterday. Now, the fractal indicators are treated a little bit funky with NinjaTrader, and it changed this color because it moved everything 1 candle to the right, but this was a red haloed candle. And here's another trade right here to the downside, right off a resistance. And I could go on. Let me show you the E-mini, and then I'll show you some stocks. The E-mini is a 5 range. We rarely get a winner trading live on the E-mini. Now, I think that's the wrong month. No, it's March. Now, this was late in the day, right here. And that is your great trade. Here, you had no 3 line. So this was a very risky trade. Here, the 3 line is with you, and down you go. I mean, this one trade, if you traded a 10 lot, that's a lot of contracts, was 5.5 points. Now, remember, I told you that one of the rules that we use is we want the 15 to cross the 50 for a short. So that was a potential short right here, but it's a little riskier. So we don't have that cross. You can take it, but it's a riskier trade. When the modified 15 is yellow, you know that there's no real good volatility in the market, and we stand aside. We're looking for the 15 and the 50 to be red. Now, any one of these candles you could have traded short, and they would have given you this trade. And I'm not picking and choosing. If I see a loser, I'm going to show it to you. I mean, every one of these candles is a winner. This is a winner. If your first target is 5 ticks, which is what our first target is, here's the trade to the downside. Right here. It's just one winner after the other. You just have to wait and be patient. Here, there is no trade. There's no trade. There's no trade. Even though they worked, you just don't have an entry in the direction of the 3 line. And when you don't, you stand aside. Again here, I mean, this is a terrific entry right here. The momentum line hasn't changed, but you know that the MACD is moving in your direction. The 3 line knows it. It colors the candle with your down color, and you could get a huge potential short trade. Now, if you entered here, you still got most of the move. If you entered here, you still got a nice chunk of the move. Here, there's no 3 line, so there's no trades. There's a short trade. And there's your long trade. The 50 can be yellow. Can be yellow or green. As long as it's not red, you've got yourself a long trade. I will not take a trade when the 50 is red and the 50 is green. And here's another short trade. Now, you could have taken the trade here, didn't go anywhere, because the market waited for a retracement and the 3 line to turn to give you your short trade. Now, let's take a look at a stock. I think nothing validates this anymore than the fact that you can see the signals taken off of a live chart. Now, here are the cues, which I happen to like to trade, and here's the same thing. Now, here's the 3 line aligned to the upside. Could have taken any of these. The one you want to take is tightest to support, and there's your long trade. And I'm going to show you Apple Computer. Here's your short trade. Now, you know, we don't day trade small biotech stocks. We do it the same way. There's your short trade. There's no trade here. This launch up has no 3 line. Modified 15 is yellow. You have very, very few trading rules to apply, but you have to apply them religiously. Now, here's a trade. Doesn't go very far. I don't know what your first target is, so I can't tell you whether that's a winner or a loser. And there's once that 50 heads down strong, and the 15 is red and really stoking down, and you get the 3 line, you take that first retracement and down you go. Just stay in as long as, and right here is that one blip of oscillator divergence. And look what it did. It did nothing. On a strong down move, when it's bracketed by momentum over it and order flow to below it, anyone who's trading oscillator divergence for a move back up off of a higher time frame signal is going to get run right over. So you just trade in this direction. And there's your next trade, and down. Now I could do this all day. Now let's look at Apple Computer. I have Yahoo. I'll show you Apple. Now we're not going to trade Apple on a 5 range. We're going to go to an 8. And if you want to be even more careful, you can trade it on a 13. We'll see how it looks on an 8. Now here's Yapple. Now this is really post-market, but there's your short. It's perfect. And the probability of these trades losing are exceedingly small. Now this is a tough trade because the 50 here is red. So it is an entry, but it's a riskier entry. You have nothing here. No 3 line, no 3 line. So you just stand aside. 3 line's the wrong color. Here's your trade right here. It's not a huge one. These are small winners, but you'll take the small ones along with the big ones. The thing that you want to avoid are the losers. There's another trade to the downside. Another small trade. And here you go to the upside. And if you can ride this all the way up. Here, no 3 line, no 3 line. Just don't take the trade. Here, this is a tough one, and I wouldn't take that trade. Here's your trade right here. You could take it here, it's riskier. Here, it's closer to support, and there's your long trade. Now, if you can trade 1,000 shares, it's a lot of money, but all you need to do is trade 100, and you can get a few points on Apple. Because you can see, look at this trade. And there's your entry. As soon as the 3 line turns, the market runs. You may get a chippy without the 3 line, but it's not going to run until all of these align. Now, the most important factor, and you see throughout this modified 15 yellow, price is just zigzagging across it. Now, the important thing to know is that these colors are not changed by anything that happens on your trading chart. They're changing based on what happens on the two higher time frames. So when you look at this in retrospect, it has tremendous ability to show you what's going on. Now here you have no long trade. You don't have the 3 line. And here's your roll it up to the bank, and this is where you bring the Brinks truck up to the trade. This is a retracement tight to resistance. The 50's down, the 15's down, and down you go. This is a big move. Remember, you're only taking 10 cents of risk, and you get 58 cents. That's a 6-to-1 risk to reward. So you could get 6 losers, which you'll never do, and 1 winner in order to make money. I mean, that's the kind of risk to reward you look at in stocks. So let me stop here and see if there are any questions. Let me just show you our offer. We're making a special offer. It's right here. Now, normally the indicator is $7.99 and the webinar special is $3.99. Now we have 125 people in the room. And for the first 10 orders, we're also going to put you in the live trading room with me in the morning. And you're going to be in there for 1 month. So if you have any issues or questions about how to trade it, you're not going to at the end of that month. And already this week, we've got 6 trades and 6 winners. And I see if I would have waited another 45 minutes in the room, I would have had a $400 trade on crude. I just didn't know. So, you know, one of our trading rules is our profit target is between 400 and 500, which we hit, or we take 3 and out. So we get 3 winners in a row, we end the session, and we hit that rule. We had 3 winners in a row. We actually had 4 in a row. I won't go into why we didn't make any money on the first winner, and it was because I moved the stop to break even a little bit early. It was an E-mini trade that was up 3 ticks, and I was a little concerned about it coming back. I moved the stop to break even. It took us out at break even, and then went on a 12-tick move, a 3-point move. And we made no money in the room, so I did not count it as a winner. You'll also get a 10-module educational training session that shows our entire trading methodology. I mean, about the 15, about the 50, and about the whole platform. And we normally don't give you that 50 period simple and that 15 period proprietary. But with those combined with the 3 line, you can see off the trading chart, you get some really, really excellent entries. And when you do, I am telling you, they are going to run for you. And I don't have a Forex feed connected. I only have a stock data feed, and I have a futures data feed. So I couldn't bring up any Forex pairs, but it moves exactly the same way. These are independent forces. They move price on any trading instrument, and they work on any time frame. Doesn't matter whether you trade time, tick, range, and they'll work on modified Renko. The Renko has to have a wick. If you trade a Renko brick, it will not work. Now let me see if there's any questions. Okay, there are. Just hang on 1 sec. Hey, Patrick, I missed most of the first half. It is recorded. Do not worry about that. Okay, let me see, Matt. 1028 on crude. I'll go back there for you. Got the time. Let me take the slides down for a second. Let me go back to crude. And let me look at 1028. Well, 1028, there is no trade. And here's the reason why. crude just fell precipitously. Now, it's oversold here on this continuation trade. If you took it, our first target's 5 ticks, our second target's 20 ticks, and it would have made a first, but you can see it was ripe for moving back up. Now, the thing is when the institutions get involved and do this, you're hoping that the buyers will at least have enough power to give you a pivot and then allow you to take the continuation short. They didn't do it here. By the time this move was over, the market was oversold and there was just nothing. Here was your great trade at 11.35. That's your short trade. When the institutions do this, you just have to let the trade go. This came with the 15 above the 50, the 3-line angle to the upside, and then I saw what happened. Volume just tripled. It went from trading 3 contracts, about 300 or 400 contracts a minute to trading about 2,500 to 3,000 a minute. And the algo machines just drop crude like a rocket ship, and you just can't get those. It doesn't make any difference. This is a full winner. This is between a $400 and $500 trade, depending upon how many contracts you've got. If you've got 2 contracts, it's still a $300 plus trade. So you're not going to get every winner, but our goal in day trading, and I'm actually going to type it in because it's so important. It's not to get all the winners. It's to avoid all the losers. Now, that's never going to happen. We're always going to get a loser or two. Not every signal works. We're never going to get into all the winners because we don't care. We want the 3-line to align, but we want to avoid almost every loser. And if we do that, we will easily make a really nice profit every month. Now, every week. Now, this week we're heading towards a $2,000 week simply because we're avoiding all the losers. And every now and then you get a big move you can't catch. No, I didn't say you rarely get a winning trade. We rarely get a losing trade, Matt, not a winner. Well, Charles, that's a good question. On the system, when to exit is really based on your risk tolerance. And what we do and what I recommend is that you exit on a reversal candle. So if you're in here, what you're doing is you're taking 10 ticks of risk, actually 9 ticks. The trade has to come here and has to give you an up candle for you to get out. And you can see on this move, it's going to take you all the way down. Now, some traders will even weather a reversal candle and a little bit more. That's all based on your automatic trade management strategy. As long as order flow, stochastic, and momentum here stay red, the likelihood of the trade ending is very unlikely. So that's another way you can exit the trade. Now, in the live trading room, I have the system on a trailer. My first target is 5 on crude. My second target is 20. And I trail the trade on a reversal candle. So I get a reversal candle, I'm out. But I know that as long as these 3 lines stay red, I'm very unlikely to get that reversal. So I'm on that trailer. So if it pulls down 13 or 14 ticks, it's dragging my stop with it, and it's locking in more and more profit. Now, we trade 4 contracts in the room. I take 3 off at target 1 and let that last contract run on the trailer. I mean, I'm very conservative in the room. You can break it up into 2 and 2, and a lot of traders take 2 off at target 1 and 2 off at target 2. On the E-mini, we take 3 off at target 1, which is a point, and then we look to get 3 points on the last contract. So these are what it scales out to be is this is about a $400 winner on, it's actually 300 on crude and 300 on the E-mini. If we get a full winner, we get a lot of full winners, I have to tell you. Yes, you can get alerts. There is an audible alert, I believe. Let me find it here. We don't have the audible alert yet. I do want to tell you, we don't. So we don't have it. But we can code that. It's very, very easy if you want to get an audible alert when the 3-line turns. We already have the color coded, which is what made this our V2 or our version 2. Putting in an audible alert would take Sergio, who is our coder, it's a master's degree, really under a day. If that's your interest, we'll do it for you. Yeah, no problem, Linda. We're going to send the recording. Sure. No, Raj, listen, I like the NQ. I just think the NQ for me is a little bit choppy. Here's the NQ. Show you how it trades. We trade the NQ on a 13 range. Now, what you said, Raj, is one of the most key things for a day trader, and that is, or a swing trader, is preservation of capital, which means your number one goal is to not lose a trade and preserve your capital. Now, here's a winner right here. We have no trade entry here. Now, it might have been a trade entry before we closed and opened, because Ninja Traders, like I said, but I'm only going to take the real ones. And this is a tough trade to take with no entry here. Now, here's your short right here. Now, each candle's 13 ticks. I would set your first target at 10 or 11 ticks, less than your first candle. And 11 ticks, that's 2.5 points, is 10. Now, this is a great short trade, but the 15's above the 50, and I wouldn't take it. And here's your long trade, and that's a winner. Here's a short trade, and this is also a winner. Now, you're going to get a million trades here. And here's your short trade. That's a winner. You can't take this trade. There's no 3-line. This is way too far off resistance. At least you want to have some space. We recommend 5 or 6 ticks max, and we'll give you all those parameters. That's a little bit too far off support to take a long trade. Here's a nice long trade. It's only one target, but it's a winner. And here's your nice winner right here. Now, depending on your ATM, you can ride that all the way down. But this is a very, very low risk, high reward entry. That's your beautiful entry right there. There's a great entry right there, right off resistance. Here's one. It's just going to give you a first target. Here we have nothing as far as we can see because we don't have the 3-line. And here you have it again. Now that's your perfect entry. If you wanted to enter here, it's a little bit far off resistance, but you've got yourself this whole move. Now, here's your long trade right here, right off support. This is a little bit far off support for me to trade. Here's your nice trade right here. And again, there's your short trade. Here, no 3-line, no nothing. Now, here is the first loss that I've seen. Now, that's a loser that occurred at 9:35. I would have taken this trade short. It's a little early into the market open, but there's a loser. So you see, and after going through 4 or 5 instruments and giving you multiple entries, and here's another Here's another winner right here that I missed. The 15 is down, the 50 is down, right here. Here's a trade that does not follow through and doesn't go. So you've got one loser here. And now we're trading pre-market. So I think you see it works really well on the NQ. If you want to trade it, just be patient. Wait till the 50's green, the 15's green. Wait for a pullback fairly tight to support or a pull-up tight to resistance. You're going to get winners. Just take them in the direction of the 3 line. If the 3 line doesn't align or the modified 15 is yellow, stand aside. Doesn't make any difference if the trade goes 150 ticks. If it doesn't align for you, let the winner go, because you're going to avoid all these choppy losers. And of all the trades I've showed, this is the first trade I saw that clearly had no follow through and would have stopped us out. And I would have taken that trade for sure. 50's down, 15's down, and I would have anticipated follow through to the downside. Let me keep going here. It doesn't work on terms of, I use Thinkorswim, Linda. And I use Thinkorswim for my stocks and my options. It's not active on Thinkorswim, but what you can do is you can set this up on a demo version for absolutely free, get a demo data feed, take the signals off of here and trade them on Thinkorswim. And we have a fair number of people that do that. The demo Ninja Trader, you can't trade off of, but it works perfectly. And they will give you a CQG data feed for free. So you can use it. You're just going to have to take your trades on the TOS platform. It does work on Sierra charts as well, though. I didn't project a Sierra, but it looks pretty much the same. It does, Fitzroy, because if you come into the room, if you're one of the first 10, I'm going to be there. You're going to trade with me for a month. And in addition, you're going to get that 10-module educational series where we spend an enormous amount of time going through all the setups based on the 3 line. And we just give you a lot of educational support. If you have any questions about anything, you can give me a call after we trade. I mean, we've got 3 people who sit here all day, and Sergio will configure the whole system for you. You don't have to do anything in terms of tech setup. It's a little complex, and he will do it for you. So you don't have to worry about that either. Again, Charles, there's lots of exit strategies. You can take it on a reversal candle, or you can take it when the 3 line leaves. As long as the 3 line is intact, you're going to continue to get a move to the downside. Or you can take it when the modified 15 turns yellow. So there are there are 3 different exit strategies. The one I use in the room is that I take the trade out on a reversal candle because my goal is I want to preserve my capital. So on this trade, I would be out here. But then what I would have done is I would have re-entered right here again and gotten the move the second time down and taken it all the way. That's just the way I do it. It doesn't make it right, but I like to trade very conservatively. And if the market gives me an up candle and a down move or a down candle and an up move, I'm going to take the trade out. And that's how I have my automatic trade management strategy configured. And that's the way we would recommend for you to do yours. But if you want to take a little bit more risk, you could take it out when you lose the 3 line. It's easy to see when you do. That would be your exit right there. That's stochastic divergence, which gets run over. But it gives you 95% of this huge move down that starts right here on this trade. And that's a monster move on the NQ. I'll scale it for you real quickly. But this is a lot of points. If you enter right here, 1 tick below, and you take it out here, you've got 13 points. I mean, that's a big move. So, I mean, that could be your whole day. I mean, that's a very, very lucrative trade. Ninja 7 or Ninja 8, Fitzroy. We've got them for both. Yes, that is what this is, Giscard. This is an entire trading methodology. It is much more than just an indicator. And that's really was my goal. And that's what I want to give to those first 10 traders. Not just an indicator that they could add to their present trading methodology, but to give them a full trading strategy. One that gives them an entry, an exit. This modified 15, I'm not going to take the time, but if I put a 15 simple or a 15 exponential around this, it would circle back and forth across it. It does not move like this because this is a nice assessment of volatility. And as long as it's stoking down like this, it means that not only is it creating a nice area of resistance, but volatility remains real strong. And as soon as volatility wanes on this move and the modified 15 goes yellow, when it goes yellow, that is a sign, it's an early sign to bail out of the trade. And look, you're up 13 points here. It's a real nice place to get out. Because look what happens. You get the reversal and you get a long signal. So it really does herald the end of a turn and a potential reversal. Now it could go, like I said, it could stoke back up and go down another 50 ticks. But you don't want to take the risk. You already have a huge amount in the bank. And as one of the traders in the room said, capital preservation is the most important thing. And in order to be a successful trader, you have to avoid risk like the plague. I mean, you don't want to assume any risk on the trade. You want to bank a conservative entry, let it run if you want on a reversal or the 3 line, and then take it out and bank your money. It's a one-time payment. It's only $3.99. Yes, David. Yes, Fitzroy. We do all the setup. Sergio does everything. You know, I mean, he's got a master's degree in computer science. It'll take him 45 minutes and he'll configure your whole workspace. Exactly, Giscard. Don't bother watching the 3 line. Watch your candle color and look for a pull back in a long trade or a pull up in a short trade, and just make sure that when it does, the 3 line stays with you on the trade. And when you get that pull back to resistance or that retracement down to support and the 3 line stays with you, you're going to enter 1 tick above the close of the entry candle right here. There's the entry candle, 1 tick above. Because you can't enter intra-candle, because although the price goes up to here, it may wind up collapsing. You want the candle to close, let the market make its statement that it is now moving up and it's a continuation candle and you're in 1 tick above. So the move you get potentially is all the way up to here. You're not going to capture 100% of it. If you're out on a reversal candle, you're going to get to here. You're going to get 6.5 points. Not a bad trade, let me tell you. If you had to pick one, you said chat, David. You mean one chart? Which would it be? Listen, the market that I like the best is the E-mini. I mean, we just get winner after winner on it. And I'm not kidding you. If you come into the live trading room, you see we just yank winner after winner after winner. The 3 line is real powerful. It's powerful on every chart. The NASDAQ is a little bit tougher, and it trades really quickly. And I can only watch 2 instruments. So I watch crude and I watch the E-mini. Crude's been really, really choppy and trading poorly. And that beautiful move that we saw today occurred at 11:40, and the room was done already, and we had already made our money. And this really, I mean, since we don't mess around, I mean, these are our trades this week. I mean, we put them all right here, and we project this every day. And what we do is we trade with Chart Trader Up. So you see our stops, you see our targets, and you know how much money we make on every trade. And if you look right here, I think this is Chart Trader, and I put it up. It's giving me a negative now. It's not giving me anything, but that's our performance. So let me just see. Raj, the risk is real minimal. And listen, risk is there's 2 factors associated with risk. One is if the trade stops out. Now we take a 6 ticks of risk on the E-mini and 10 ticks of risk on crude. So the worst case scenario is we're going to lose about 280, 290 on the E-mini. And we can lose 400 on crude because I create 4 contracts. But overall risk is associated not only with how much you can lose on every trade, it's what percentage of your trades are losers. So if 80 to 85% of your trades are winners, overall the risk you're taking is really minimal as it pertains to the entire trading methodology. So we rarely have a big drawdown. So simply because the trading methodology is so conservative. No, Ken, you do not. I'll show you the data feeds that I have. They're right here. If you just want to trade futures, you need a CQG data feed. If you want to trade stocks, you need a kinetic data feed. Now, I pay for this data feed. It's an extra $51. I think it's $55 a month. The one thing that Ninja does that very few platforms do is allow you to add dual data feeds. So I can't add a third one, which is FXCM. I would have to disconnect these 2 and add FXCM to do futures. Now, FXCM is gone, but it's still called an FXCM data feed, even though there's no FXCM broker. So those are the data feeds. And if you have a broker that, like Ninja, you get CQG for free. You don't have to pay for the data feed. But I do pay for the kinetic data feed. You do not have to, that's all you need, Ken. Remember, if you look at the, if you look here, I don't know if we're going to be able to see it here now because the market's closed, but we might be able to. Let me just put this on the right contract. You see how you're getting the sell and you're getting the buy? There's very few here, but that's where the order flow metric is coming off of. And this is coming right in off the CQG data feed. We're looking at the number of traders on the bid and the number of traders on the ask. And that really is what order flow assessment is all about. Now we could put that into the candle, the tick, the number of buy, sell, and balance in each tick. It just doesn't have any predictive value. And the one thing that we don't do on the charts is put information up that doesn't help us trade. So all that I see as order flow really helping us out with is looking at buying and selling pressure based off the delta moving averages of the higher time frames. And that comes in with the data feed. That's all you need, Charles. No other order flow indicators. And I'm telling you, if you needed them, I would tell you. Yeah, David, it's the E-mini. I really like the E-mini a lot.
How many left, Mark?
There are only 4 left, Rory? Okay, there are only 4 left. We already got 6. So it's very, very reliable. Let me just put it up real quickly. I mean, I just happen to love it. I mean, in the last couple of weeks, the volatility has been huge on it, and it's just given us great trades. Now, these are all potential trades, but I'll show you the trades I took this morning. They were such easy trades to take. Now, let's see here. Right here was the first trade. No, nope, I'm wrong. I'm sorry. We're 226. Here's the problem. I'm on a 13 range, and I'm looking for my entries. Let me go to a 5 range. That's a great 13 range entry. Here's the 5 range. Let me go back, and I'll show you the entries I took. I know exactly the ones I took, and I can corroborate them with the back end. Let me see what I did here. Okay, nothing here, nothing here. No, I did take a trade. I'll look at the times. I'll tell you right now. The first entry I took was on the E-mini. Show it right here. Was at 9:37 on the E-mini. Except this is the wrong month. Yep, this is right. 9:37 on the E-mini. I took it right here. I took it long. And this trade went a 1 1/4. That was my first trade. My next trade was at 9:57, right here. Whoops. You see, none of these are huge. And this one went 1.75. My next trade was at 10:03. I don't see a trade. Oh, it was at 10. It was 10:03 on crude oil. My next trade on the E-mini was at 10:52. Because we got a winner on crude, and 10:52 was right there. That's 10:53 was 10:52. Let me give you the exact time. It was 10:52:44. Now it might have been here. This was at 10. It was here. This trade, it came down, came back, and went all the way down to my reversal candle. And this is my last trade, right here, for 3 points. That was it. Every trade I took was with the 50 down, the 15 down, and the 3 line. 1, 50 down, 15 down, and the 3 line. 15. This was a beautiful trade, which I did not take, which I'd like to give myself a canary on. And there was my other trade, 15 down, or 50 can be yellow, 15 down for the short, and there was my long with the 3 line, 15 up, 50 up, and a nice trade for 1.25. No major home run except for the last trade. And that's all we need. That was it. And I really like the way the 3 mini trades. And this was a real tough call. I'll show you this. I remember it in the room. We had the 3 line. And the 15 was just crossing the 50. The 3 line was rolling. And I just decided not to take it. And it would have given us a full winner. 3 points is a full winner. and I sidestepped it, and it would have gone 4 points. But I didn't take it in the room. I just want you to know. But looking back on it, you know, you want it's tougher when you're trading off the right edge. So let me see if there are any other questions. Ken, order flow is a really important metric to use. Stochastic and momentum are also important with the 2 higher time frames, but order flow is part of the cake. It's not the icing. I mean, it really does give you an excellent assessment of who's in control, the buyers or the sellers, and you want that order flow line. That's why it's the first one that I used to assess, to show you what the 3 line was, is because order flow is extremely important. And if the order flow line doesn't align with momentum and stochastic, you won't get a trade. And it increases risk significantly on the trade. That's why we want all 3. Okay, thank you, guys. Thank you. Listen, you can trade anything, Fitzroy. I'm in love with range bars. You can trade tick or time. It makes absolutely no difference. The signals are all going to be the same, and the assessment is all going to be made off the 2 higher time frames. If you trade time, like I said, it'll look at time frames that are 3 times longer. 2 minute will give you a 6 minute and an 18 minute. Tick is based off of the fib. If you're trading a 377, it's then a 610, and then it's the next fib, which is a 9 something. So it doesn't make any difference. Yeah. David, I like S&P first, and then I'll take crude second. That's what I trade in the room. It sure is, Terry. Linda, what I usually do is on the E-mini, I trade a 5 range. On crude, I trade an 8. Now, we traded the NASDAQ for a long time on a 13. Whatever instrument you want to trade, we have it worked out, and we'll give you our recommendations if you want to trade range. If you want to trade time or tick, you're kind of on your own, because that's really tough. It's tough for us to tell you the optimal. But as far as ranges, we have everything figured out, and it's all based on the ATR of the instrument, the average true range. The Forex we trade on a 5 range, bonds and notes we trade on a 3 range, gold we trade on an 8 range, all based on the volatility of the instrument, or the average true range. You just ask us, and we'll send you a list. You have an instrument that we don't have on the list, Linda. We'll figure it out for you. Okay, Fitzroy. When I say 3 line, it's this line right here. This is the 3 line indicator. See the 3 line indicator V2. That's what this indicator is called. That's what I mean when I say 3 line. And if you look over here, you can't see it very well, but it says RL 3 line indicator V2. That's the one assessing momentum, stochastic, and then order flow. Nothing ever repaints, Chris. Nothing. Everything you see on a dead chart is exactly the way it was on the live chart. Here's the only thing that changes. NinjaTrader coding pushes every single assessment 1 candle to the right. Now, that's not us repainting it. It's NinjaTrader doing it. And we can't help that. So when you close the chart and reopen it, it is going to move. It's going to move a candle. And that's because when the chart is live, it's comparing what's going on this chart with the previous candle. When you close and open it, Ninja is comparing the entry candle with the next candle. Remember, that candle hasn't formed yet on a live chart, but it's just a flaw in the platform that when it's looking at a fractal indicator that does a multi-time frame assessment, it shifts the way it looks at it, so it pushes everything a candle to the right. So it's off a little bit, but nothing is repainted in the sense that we don't eliminate bad trades or finagle with the charts. That's just the way they're projected. Listen, Fitzroy, if volatility is really rugged, and it was today on crude, you're not going to get a three-line alignment. And if it does occur, it won't occur when the 50 and the 15 are in a position to trade. You've got multiple parameters that need to be met. And also, if it happens, it'll occur on a yellow modified 15. You just won't get, like right in here. Look at this tremendous area of chop. Now, I saw this on the E-mini this morning and pointed out to everybody in the room. This is why we don't touch the charts when the modified 15 is yellow, because there's no volatility and the market is just chopping. So you just stand aside. And I was hoping on this fall, I was waiting for the first pullback. I got it, I entered, and I got 1.75 points. I just waited for it to align, and I was hoping throughout this whole move and the pullback, the 3-line would stay with me. It didn't turn, and it gave me, almost 2 points. I mean, it's nothing to sneeze at, and we'll take it. It's about a $200+ trade, so I'm more than happy with it. But that's what happens in chop. You get this too. Right here is, again, it's a period of complete chop. Modified 15 is yellow. Just ignore everything that happens. Wait for the market to establish a trend. Wait for the 50 and 15 to come into alignment. Wait for that pullback and the 3-line to hit, and you're going to get it. You're going to get it multiple times every day on crude in the E-mini. And if you traded all day, you would have made a lot more money. But in the room, our profit target's 400 to 500 or three. And if we get 3 winners in a row and out, we rarely make less than $500. We don't have it for TradeStation, Charles. I know that. I mean, we're working on it. If you want to use TradeStation, you're going to have to use a demo version of this, which is free, a demo version of CQG, which is free, and take the signals off of this and transfer them to TradeStation and take the trades on TradeStation. We have traders who do it. It's not hard. And you can see the trades coming long before they hit. So that's the best I can offer you right now, because we're just not on it. And let me tell you, that seems to be the most TradeStation and Thinkorswim are really popular platforms. We're just not ready yet. We're just finishing our NinjaTrader 8 total version, and we're on Sierra. And our next one is either going to be Thinkorswim or TradeStation. We'll be moving to. No problem, Linda. No, Raj, we can add it. Thank you, Kevin. Kevin just purchased. Thank you, guys. Thank you. No, you don't, Ken. There is no order flow feed. That's all you need, Ken. You have lifetime Ninja and a CQG feed. This will run fine. Yes, you will get the replay. You can again, Fitzroy. I trade range. I'm telling you, it'll work fine on tick. And again, you will get the replay. No, I've been answering it, Ken. I think you got it. Your S&P E-mini, David. Listen, it's almost every week. I'm telling you. Each mini contract. Oh, that's funny. When you say 1 minute or tick charts, if you're referring to the E-mini, listen, you can trade the E-mini really well on a 2 minute or a 1 minute. I think either one of them will work well for you. I like time more than I like tick, Linda. Listen, it works. We have an auto trader. It's not part of it. That it trades the euro, and it trades the euro. We have the auto on the euro. We have the 6E, the 6C, and the 6J, and it consistently gets winners on those. The only reason I don't trade them is I can't watch 3 instruments. On a 5 range, it does really good. No. Again, Chris, nothing repaints. And there is a recording. Those are all executed orders I showed you, Fitzroy. You are good with just a CQG feed. Thank you, Charles. Charles just bought. Ken just bought. Thank you, guys. We're located in Florida, South Florida, David, Miami. Thank you, Linda. Just call us, Greg. Rory, or send us an email, or Rory send you videos. Listen, Linda, you're going to get great signals on crude. I'm telling you, we traded in the room. You're going to see. Hold on a second. Just wait for us, Ken. We'll figure it. We'll do everything for you. Don't worry about it. No, we got 8. We only have 2 left. No, no, it's all ready, Charles. If you look at if you have it, you'll get the upgrade. Just send us an email. After you buy, David, it runs on your automatic trade management strategy, which we're going to configure for you on our recommended ATM. So that's how it's going to run. You can modify it, but we have a recommended trade management strategy that we're going to program in for you. And we do have the recording. It does not work. If the Unirenko, Daniel, has a wick, it works. If there's no wick, it won't work on a brick. And I'll just tell you really quick. I don't want to hold people up much, but listen, and this is really important for you to know, and I think for everyone to know. I'm going to show you a standard Renko, and I'm going to show you on the stochastic formula. You need 4 parameters to create a stochastic line. You need a high, a low, you need an open, and you need a close. If you don't have those 4 values, the stochastic formula does not work. Now, time, tick, and range, and modified Renko, because they give you a wick, give you a high, give you a low, give you an open, give you a close. But a brick doesn't give you that enough data. I see tons of expensive software running brick Renkos with a stochastic, and it doesn't work because it only has an open and a close. Or you consider this the high or the low. It doesn't make any difference. Bottom line is, it doesn't have a high, low, open, close. It cannot work on a candle that doesn't have a wick. Hey, Charles. Well, we're in Miami. I'm glad, Ken. Listen, if you come into the trading room with me, we're going to make money. David, Sergio leaves at 4:00 p.m. Eastern. He'll have you set up tomorrow morning, and you'll be in the room. If tomorrow's Wednesday, you'll be in the room all set up on Thursday morning. So that's your time frame. Nice, James. Thank you. Yes. Rory will send everybody who purchased an invoice receipt tonight. And I promise you, Sergio will contact all of you tomorrow and do your installation. I'm going to tell him that's all his only job tomorrow is to install everybody who purchased today. This way, you'll be in the room on Thursday live with me trading. Okay, Charles, you're not that far away. I don't know how far Navarre is. I don't know if you're in the Panhandle or not. Oh. Okay, I'll show it to you, Greg. Correct, Daniel. On a 5 range Renko, once it's got a 5 range, well, all these Renkos have different rules. I don't even know what the rule is on a 5 brick, because I've never looked at Renko, and I personally think Renko is not for me because it obliterates market structure, and I want to see market structure. So I have paid very little attention to Renko because they stack and they look great when you get a winner, but they're gonna stutter you out. I want to see how the market goes. I mean, every one of these is an expression of sentiment. When your entry candle is an engulfing candle, and you've got 8 ticks of selling pressure, 5 ticks of selling pressure on a 5 range, you know that you've got a strong selling right here. There's no wick on this candle. So the bears have not let the bulls create a wick here. That's a great entry candle. And you get a lot of information just by looking at price action, and it's important information. So I like trading range because of that. And the Renko bricks obliterate all of this. You get great price actions assessments with time, and you get them with tick charts, but Renko completely obliterates them. So I just don't even look at Renko. I just don't pay much attention to it because it's just not the way I trade. And I'm not going to say that it doesn't work for some people, but you can't use an oscillator with it because that's what you need to for the formula on the oscillator to work. You need a high, low, open, close, and there's not enough data. We do, David. David said 300 per day on the E-mini. Yes. Now, I'm not going to promise you every single day. I would rather under-promise than overproduce, but we do really well on the E-mini. And today we made $400. The only trades we took were on the E-mini, $412.50, and that's all we traded was the E-mini. So yesterday we had 2 winners and 2 winners on the E-mini and 1 on crude. So we did get a $150 winner on crude, but yesterday we made $525. So we made about $375 on the E-mini. E-mini's been great to trade. The entries are real good as long as you adhere to our rules. Well, I didn't want to go into that, David. I don't want to go into it in this webinar. If you come into the room, you'll see it. It just allows you a little more. It allows you to get in and out of the trades easier. And I don't want to confuse everyone because that's information they're going to get. It's just it's a trading tool that makes it easier to trade than trading directly off of a dynamic or static dome. That's all. But everybody gets the same entries. I call them way in advance. I turn everyone's attention to the chart that I see the entry emerging on just by saying, look at the E-mini. And you just look at it. You know that a trade is coming. And I take it well before, and it's up. And like I said, Chart Trader's operational. You're going to see the stop set up, and you're going to see all the targets, and it's going to project exactly our profit loss. We're very, very, very transparent. I don't just tell you, hey, we're already in the trade, and we made $300, and you see nothing. You see everything. All the stops hit, and exactly what the profit loss is. So listen, I'm going to stop because I've been going an hour and 45, but I appreciate all the questions and I appreciate all the purchases. I promise you, you guys won't regret it. It's a great indicator. It's a great system, and it's going to make you money. And hopefully what you paid in one day, you will make on your first day in the room. Although I recommend on Thursday and Friday, you just trade on sim just to get used to how things evolve. And then Monday, come out of the box and you know, I don't know how much we'll make on the E-mini alone, but you know, we're looking for $1,500 plus per week. So listen, everyone, have a really, hold on one second here. The minimum capital to start, Daniel, if you only want to trade listen, If you want to trade 4 contracts on crude, you're going to need about 5,000. If you trade 2 contracts on crude and 4 on the E-mini, you can trade with 3,000. Our drawdowns are tiny. So the amount that you can start with is really not large. If you have a $5,000 account, you should have more than enough. You can cut it to 4 or 3,500. You don't really need a huge amount. So take care, everyone. And the important thing was everybody throws up JPEGs and they show you great trades. I wanted you to see how this evolved on a real chart that happened today, and to show you the setups and let you see how the 3-line traced out the entries on a real chart. It's not a live chart, but that's how it evolved in real time. So have a great evening. Thank you guys, so many guys, for already buying it. And listen, I'm here every day. I trade the system every day, and we're going to make some loot. So have a great evening. If you have any questions, call us. We'll be here for a while, or send us an email. So long, everyone. Bye-bye, and thanks again. Thank you, guys. Thank you. Thank you all. Thank you, Linda. Have a nice evening. Bye-bye.